Hi, everybody. Welcome back to Ox Talks. Thanks for watching the show today. I very much appreciate you guys supporting this channel, liking, sharing the videos as far and wide as you can with coworkers, colleagues, family members, everybody you can think of, so we can keep waking folks up about the economy. But also, please subscribe to the channel if you haven't subscribed. We are growing the community, and it means a lot to me, so thanks for watching. I have a story that I touched on briefly yesterday that came out later in the day regarding the Ally Bank issue with the auto loan delinquencies. But I thought it was worth giving it actually a regular length, maybe an 8 or 10 minute video, as opposed to a 1 minute short yesterday. As I started digging in further, I looked into Ally Bank. What kind of customers do they cater to? Their stock did not recover today, but this is a symptom of an ailing consumer. It's a symptom of people continuing to try to finance things that they can't afford. And in many respects, their credit score is reflective of the fact that they should not be acquiring these vehicles. So let me delve into the story a little bit deeper, because I think it's worth a while for all of us to pay attention to. Because again, I think this is just the tip of the iceberg. You're going to start seeing, a cascade of auto loan delinquencies, auto repossessions, banks, bank failures, banks that cater to these subprime borrowers. Let me jump right in. Yesterday's story was out of Market Watch, and it says Ally Financial Corporation stock fell sharply on Tuesday after the consumer lender said delinquencies in its retail car loan business were up more than expected as people continue to struggle with inflation. Ally Financial stock was down 17.62% at the closing bell, its biggest one-day decline since it fell 21.8% on March 16th of 2020, right? So the biggest daily decline going back about 4.5 years for Ally Financial. And I just checked the ticker tape today. The market is closed as of now, and the stock did not recover today, okay? So it's down almost 20% in the last 2 days. It didn't fall today, but it basically finished flat. The stock gave back all of its gains for the year on Tuesday and ended the session down 6.4% so far in 2024. It said the financial firm is seeing more strain in its consumer car loan business and warned it may take longer than expected to achieve its long-term target of 15% return on tangible common equity. I then pulled up a story on Investopedia today where the CEO made some specific comments, which I believe was the catalyst for the stock to fall. But it's not the stock, it's not the CEO's comments, it's what's behind that. And we're going back to the struggling consumers and struggling people in this country. And this article from Investopedia says Ally stock drops as its CFO says consumers are struggling and delinquencies are rising. Says Ally Financial stock sank sharply after the bank's CFO said at an investor conference that consumers are struggling with inflation and that Ally Bank's credit challenges have intensified during the current quarter. Ally CFO Russ Hutchinson said Tuesday that Ally's typical borrower is struggling with a high inflation and cost of living, and now, more recently, a weakening employment picture, according to a transcript of Tuesday Barclays event provided by AlphaSets. So we all know inflation's higher. I'm going to cover inflation later on today, probably in a separate video on the heels of the release this morning. So we'll delve into that. Yes, inflation and core inflation especially, all the important things continue to go up. But what caught my attention here is the CFO's comments about weakening employment picture. What that means is layoffs. means that people don't have jobs. Either don't have jobs or they can't find a job, or they've been laid off from their job. And what happens when they have debt, like auto loan debt and other types of debt, they can't afford to make the payments. Okay, so Ally shares were down 18%. We talked about that. A particularly difficult area, says, of Ally's loan base is in the auto market. Hutchinson said Ally experienced a rise in delinquencies of about 20 basis points above where Ally expected for the last 2 months. Net charge-up, that's a lot, 20 basis point rise in delinquencies over what they expected. So this is picking up steam. This is catching momentum. People are literally broke. It says net charge-off, the debts a financial institution writes off on the assumption they will never get repaid were about 10 basis points higher than Ally expected across July and August. We talked about charge-offs in yesterday's video as it relates to credit card charge-offs on credit card bills that people can no longer afford to pay. And we talked about charge-offs for Discover Card, and I believe Capital One, and those are both also on the rise. Hutchinson said Ally is expecting its rate of net charge-offs to rise in the coming months because of the size of the pool of borrowers Ally believes is struggling. Listen to this, especially those with loans over 2 months past due. Okay, so they have a substantial enough pool of people that are 60 days or more behind on their auto loan payments. Okay, that they're saying that they're expecting the size of the pool of borrowers that they believe is struggling to continue to rise. Ally reduced its exposure, it says, to the loan world with the sale of its Ally lending arm earlier this year. And then what I did was I just quickly pulled up from Ally's website a snapshot of, a comparison. I said, well, I'm trying to find out, are they a subprime lender or what? And Ally Bank, it says, loan terms for auto loans. It will lend on loan terms up to 84 months. That is horrible. Number one, 84 months loan terms. It didn't specify loan amount or starting APR. I'm sure they're higher interest rates. Here's the thing, though. They will lend as long as you have a minimum credit score, FICO score, of 520. Guys, do your own research on that. 520 FICO scores is all it takes to get your foot in the door to get an auto loan, evidently, with Ally Bank. And they wonder why their stock dropped 17, 18% yesterday. They wonder why their pool of consumers is 60 days or more behind on their auto loan payments. Well, that's one real good indicator right there. Because if you have a credit score of 520, again, I know there are outlier circumstances when people have unforeseen events, medical emergencies, medical bills for themselves or a loved one. I know there are extenuating circumstances, but by and large, folks with 520 FICO scores are just irresponsible with their money. They're over indebting themselves, and they're simply, kind of in the category of loserville, if you will. And again, I'm sure I'll get some hate comments for that, but it is inconsistent bill paying. It's late. It's not making your payments, not the minimum payments that you should be making. It's defaulting on debt. It's having maybe a bankruptcy or things in your record. Again, we all go through issues where your credit score can take a hit. But Ally obviously is making a lot of their, let's say, revenues off of catering to people that have bad credit. Okay, so that's what's going on with Ally. And what this means, look, if you're 60 days, I don't mean you as in to the watchers, but if someone is 60 days or more late on their car loan, it is, let's say, probably not going to, let's say, arise where they can get that loan back on track. That is a strong indicator that they're going to go 90 days late, 120 late. You saw the thumbnail I did today for the video, and guess what? Eventually that car is going to get hooked up by a repossession agency. It's going to get towed out of their garage, get towed off their driveway, get towed away from their place of business, whatever it is, and it's going to end badly. So again, I know it's not great information today, but we need to just be awake as to what's happening, all right? And if you're one of those that is struggling, and don't leave me hate comments. Yeah, I know everyone needs a vehicle, all that kind of stuff. I get it, but we've got to do our best to pull ourselves out of the hole that we're in. Okay, the government's not going to help us. The handouts are not necessarily on the way. The rates are not necessarily going to start precipitously dropping like we're being led to believe. And we know how much uncertainty there is on the political front right now. Without going into detail on that, you know what I'm talking about. I'll leave it there today at about 10 minutes. Hope you guys enjoyed the content. Please subscribe to the channel and keep supporting its growth. Thank you very much. Talk to you soon. Bye.